Hello, everybody. This is Angelo Christian. Thank you for checking out another edition of Real Estate Insider. Today, we're going to actually talk about the 10 steps on choosing the right loan, all right, when buying a house. So, I've broken it down to 10 simple steps, a formula to make sure that you're choosing the right loan and the right lender to help you when buying a house, because it's very, very important that when you're looking to buy a house, that you're using the right loan program, you have the right company representing you, the right product, the right payment, and all of these things matter. And it's very complicated because there's so many different loan programs. There's so many different types. There's mortgage companies, there's banks, there's credit unions, there's mortgage brokers, there's realtors. And for somebody that's a first time buyer, or even if you bought a few homes, it can still be an arduous process. So I've distilled it down and make it very simple and the 10 steps to follow to make sure that you're getting the best program, the best bang for your dollar. And basically, who I am in this space, I've been doing mortgage lending for almost 15 years. We help over 12,000 people. We're one of the largest providers of government home loan programs in the country. We lend nationwide, and we specialize in FHA, VA, USDA, and conventional and construction and renovation loans. And so I've had the privilege to help over 100,000 people with buying a home and done almost $1 billion in lending. And love what I do. I love helping people to rise and transform and transition into getting into a home. And that's what I built my company on. And so because of the amount of people I've helped, I've seen so many different type of situations. I've helped so many people, one day out of bankruptcy, 500 credit score, get into a home. Just lost their job. Their credit score drop while they're trying to buy a house. Help build a home. Just so many different things that I've seen. So, and I've seen what the 10 core elements are and things that are needed to choose the right loan program for you, because you don't want to choose the wrong loan and regret it and be sorry, or the wrong company. So, the there's 10 things that you have to think about when choosing the right loan, okay? So, the first thing is, where are you looking to buy? Where the location, all right? So, because if you're looking to buy in the city versus the country, there's different loan programs that are gonna be available. Are you looking to purchase, in downtown of a city, of a large metropolitan city? Are you looking to purchase in a rural area? For example, with USDA loans, it's a rural loan. You can't use that in a metropolitan city, but you can use an FHA loan in the city, or a conventional loan in the city, a major city. Okay, so the first things what we need to find out is, where are you looking to buy? Where? All right. So the second thing is, what kind of home do you want? Do you want a single family home? Do you want a townhome? Do you want a condo, a high rise? Because all of this matters. Because if you want to buy a condo, you're probably not going to be able to do an FHA loan. It's going to be tough because a lot of condos aren't FHA approved, right? Or let's say you want a quadplex, a fourplex. You can still get a fourplex with FHA or conventional. Let's say you want a high rise. You might not be able to do an FHA loan or a USDA loan if you're trying to buy a high rise. You see? So we need to know, what type of property do you want a mobile home? If you want a mobile home, you're not probably going to be able to do a conventional loan on that. Probably have to be an FHA loan or a VA loan or something like that. So also, where's your credit at? Okay, because if you have a 780 credit score, you're probably going to do like a conventional type loan. You may do an FHA loan or USDA. But if you have a 550 credit score, you can't do a conventional loan. You would do a government loan, because the government doesn't have those restrictions on credit like they do with a conventional loan. Conventional loan, you normally have to have really good credit, like a bank, to get a loan. But on FHA, or FHA, we go down to a 550 credit score with FHA. USDA goes down to a 620. VA, we go down to a 550 credit score. And conventional loans and bank loans, they normally want 700 credit. So that matters, right? The other thing is, what's your debt to income ratio? That's another thing they look at. They take your gross monthly income versus your monthly debts, not including cost of living, or food or housing. And they take your bills, like your credit card bills, your car payments, your student loans, and they want to see how much is your debt to income ratio. If you have a high debt to income ratio, like over 50%, you probably won't be able to do a conventional loan, because conventional loans like to have the debt ratio under 50%, your back end debt ratio under 50%. Whereas FHA loans or VA loans, you can actually go to a 56% debt ratio, a higher debt ratio tolerance. So they're more liberal with your debt ratio, right? And then you also have your housing debt ratio, which is your house payment relative to your income. So if you, with FHA and VA, you can go up to 45% of your income for your house payment. But with conventional, they want to keep that, usually around 35% of your income. So we have to look at your debt ratio as well to see what's the best loan program for you. And then also the nature of your income. What type of income do you earn? If you cannot verify your income and you're self employed and you write everything off, you can't really do a conventional or FHA or government loan. You most likely have to do a bank statement self employed loan. So, or if you're a waiter and you just started getting tips, or you're a car salesman and you just started selling cars, and you've only been doing that for a year or so, there are some programs that you might not be able to use, um, to consider that commission or tip income. Fortunately for us, if you've been at just a year doing commission income, we can use that income to qualify you, whereas most companies require 2 years of commission income or tips. So, or let's say that you receive cash money and you can't verify it. We have programs for no documentation loans that we can give you credit for that income, so you can qualify to buy the house. So that's an opportunity right there. But with a conventional loan, if you had cash money you couldn't verify, you wouldn't be able to buy a home with a conventional loan. So it depends on the nature of your income, and how you're getting paid. And so and also, can you document the income? That's going to determine the type of loan program that you can go on. So um, then also the price of the home. What's the price of the home that you want to buy? If you're trying to buy a $400,000 home with an FHA loan in Harris County in Houston, Texas, you won't be able to do that because the maximum purchase price, or loan limit rather, is $331,000. Government loans like FHA and VA have a loan limit, and so does conventional. For conventional and VA loans right now, the loan limit's $450,000. So, but FHA loan, the loan limit, the lowest is around 330. So, if you want to buy a $600,000 home, you'd have to go to a jumbo loan program. You couldn't do an FHA loan unless that county limit allows it. Now, some counties around the country have different loan limits based on the county that you live in. So, like for example, like in Virginia, you could go up to $650,000 loan amount and still be FHA or VA, or if you're in Washington D.C. or certain parts of California. But most of the country for FHA, the loan limit's around $330,000. Um, so the price of the home also is going to dictate the type of loan that you're able to get, right? So that's a really important thing. And then another step seven is how much money do you have to invest into this? How much money do you have to invest into the real estate? If you have zero, you have no money, um, then you probably have to do like a USDA or VA or FHA loan with a down payment assistance. If you have 20% to put down, then we would do like a conventional loan program because you have the money to put down, or you have you do a jumbo loan. So a lot of it's going to come down to, the access to your funds. If you do, and then how much do you have on hand? How much liquid or how much can you get access to from a gift from family or from your employer. So if you have a lot of money, you'd probably look at a conventional or jumbo loan. If you don't have a lot of money to put down, then we'd look at like a USDA zero down 100% financing, or VA or FHA zero down with a down payment assistance grant program. So, and also what is your time frame? If you're looking to do this right now, or is it 3 months from now or 6 months from now? That's also going to determine the type of loan because, for example, like first time buyer tax credits, they're only available for a very short amount of time. So if you're trying to do this a year from now, that first time buyer tax credit might be gone. It might not be available anymore. So the time frame matters. If you're trying to do a construction loan, those normally take 6 months to a year to build. And you might not have that time to wait. I was talking to someone earlier today, and they said, "Well, I want to buy a house, but it's not going to be ready for a year, and I need to be in something right now." So, that's not going to work for that person. Um, the other thing is, what's the nature of your employment? That's step 9 is if you're a federal or state employee, you have certain grants and incentives. The Homes for Heroes program that gives you up to $2,000 of assistance. If you served in the military, you have eligibility for VA benefits to get 100% financing and get your closing costs included. You know, so if you're a firefighter, a police officer, or like I said, a state or federal. I'm doing a loan right now for a USDA investigator, and they get Homes for Heroes benefits. Okay, and so there's a whole bunch of different benefits that you can get depending on your employment. You know, like the police officer, one of the police officers I'm helping, he's getting up to $10,000 of assistance to buy his home, right? So school teachers, federal or state employees, that matters. Um, you know, so, and you want to be able to find out all the different incentives and benefits, whether it's first time buyer tax credits, grants, your employment, whether you're a state or federal employee, because you want to be able to use all that to help buy your home. If you could get $10,000 off the price of your home by using these incentives, wouldn't that help, put you in a better financial situation? Don't you agree that that would be a good thing to use? Well, if you're not aware of it and you're not dealing with the right company, they may not even offer that, and they may not be able to help you with that. So that's the last thing I want to wrap this up with is step number 10 is making sure you're working with the right company, because when you're buying a home, there's mortgage brokers, there's lenders, there's a bank, there's credit unions. And so you got to know who you're working with in the space. A mortgage broker doesn't actually have any money to lend. He's finding a lender for you and charging you a third party fee to make a loan to you. Okay, like my company, we're a mortgage bank. We lend the money to you directly, and we're a government sponsored and approved lender, and one of the largest providers and award winning lender for FHA and USDA and VA. Okay, that's what we are. That's who we our space, what we specialize in. Okay, we're lending our money. We're the bank giving you the money. We make the decision from our desk on a loan approval. A mortgage broker takes your application and takes it to us or to another bank and says, "Hey, will you make a loan on this and give me a commission for bringing you this loan?" That's what a mortgage broker does. Okay. A credit union is where they're a depository. They get deposits from their credit union members, and then they have their members that are their customers, and they don't sell those mortgages to Fannie Mae or Freddie Mac. They normally service those loans, and they also create their own underwriting guidelines for their loan programs. And typically, their loan programs, they start with anywhere from 5 to 20% down, and you have to have excellent credit to get a loan from them. All right. And then lastly, there's a FDIC, a depository bank like probably like Wells Fargo or Chase, and it's very similar to a credit union, but they normally sell their mortgages to Fannie Mae and Freddie Mac, or to another investor, and they normally have very strict credit standards as well. You normally have to have excellent credit and at least 5 to 20% down, and you have to pay your closing costs to be able to get a loan through them. So, If you were to buy a $200,000 home, for example, we'll show a demonstration. If you were to go through a bank or a credit union, you'd have to put about $16,000 to $17,000 down on a $200,000 home to pay for the down payment and the closing costs, and you'd have to have usually 700 credit to qualify. Where with us, we go down to a 550 credit score, and you can get all your closing costs included, and typically buy a house with anywhere from $900 total move in to as 3%, about 5 to 7,000 total move in. So with a company like us, you can save tens of thousands of dollars, and also get the tax credit for first time buyers if you are, or down payment assistance even if you're not a first time buyer, and get up to 3 months no payments after closing with our loan program. And so, whoever you work with, just know who they are in that space, and take all these things into consideration to make sure that you're choosing to get the best loan for you. Don't go in there blindly and look to get a USDA loan and you're trying to buy in Manhattan, or Los Angeles, and you apply for the loan and you get disqualified. Make sure that you take all this assessment, with the location, where, what kind of home are you looking for? Where does your credit score stand? What's your debt ratio? The nature of your income? What's the price of the home that you want? You don't want to buy, a $600,000 home and apply for a FHA loan. It's not going to work in Houston, Texas. That'll work in Washington D.C. Or in Norfolk, Virginia, but it won't work in some parts of the country. So you want to check that to make sure. And also, how much money do you have on hand? Do you have $10? Do you have $1,000? Do you have $100,000? All this is going to come into a play. Also, the time frame that you're looking to buy a home, and also incentives that are available to you. Don't skip over those. Those are very, very important to have those incentives. When you consult with us, we go over all this. We have a strategy call to see all the opportunities and benefits that are available to you. And like I said, also make sure you know the type of company that you're working with, so you understand, are you getting the best value for you when you're buying a home. So thank you guys so much for checking this out today. My name is Angelo Christian. If you're looking to get help with buying a house or you need more information, give me a call directly at 832-431-6331. If you have any comments, you can leave them down below. Please follow us. We do great content every single week. This is one of our shows we do called Real Estate Insider. You can follow us on our Facebook and Instagram and LinkedIn. We'd love to hear from you. We really appreciate your feedback and support for following us, all of our great listeners. And again, if you're looking to buy a house or get pre-approved, reach out to us, and we'll definitely take care of you right away to give you the best deal to make sure that you're getting the best loan program for you. Thank you so much, guys. Have a great weekend. All right, bye-bye.